The average sale price for homes in the Portland metro area is down pretty significantly for 2 weeks in a row now. So kind of bad news for sellers, good news for buyers. I also have another market projection for 2023, which we'll get into, and then I have some rental market updates. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District, and of course I have got our weekly market statistics for the full Portland metro area. That's Portland Metro, all the bedroom communities, plus Southwest Washington. So let's get into the numbers. So last week we didn't get into our weekly numbers because we were doing our year-end wrap-up. But when we were comparing 2 weeks ago, the average sale price to roughly the same time period last year, the numbers were really grim. It was like almost 13% down, 12.8% lower this year on average homes sold for than they did for roughly the same week last year. This most recent week though, it's only down 9% versus roughly the same time period last year. Keep in mind though that this is a small sampling of numbers. These weekly statistics, we don't have a big number of homes that we're averaging out here. So, you know, there could be, as I've said in the past, 1 or 2 big transactions that are there, or a couple of big transactions that are missing that can make these numbers kind of go wild, skew up and down rather dramatically from week to week. The median sale price is supposed to take out some of that volatility. But even the median sale price 2 weeks ago was down 6% compared to last year. This last week, though, it was only down 2%, which is a little more in line with what we'd been seeing in prior weeks. Prior weeks, it was down 1%, it was up 1%, and it was right on par with where we were last year. So neither a gain or a loss for that week. So 2% a little bit better, but it is showing that trend of the average sale price, median sale prices definitely dropping this year compared to last year. The inventory continues to drop, down another 2% at 3665. That's the total number of active listings, so the supply of the supply and demand equation. We've been seeing that number drop week after week after week for just about 3 months straight now, and I suspect that we'll probably start to see that number moderate and start to come up as we enter our spring buying season, when we'll start to see sellers come back to market with homes for sale. The number of new listings this last week was up only slightly, 0.4% more. A number of price reductions was also down from last week, 368, that was down 9%. The number of price reductions that were $15,000 or more, so a little more significant, was just over 200, and still pretty low compared to what we've typically been seeing throughout the fall and winter. So the new pending deals, so the number of deals that went under contract this last week, the demand of our supply and demand equation is up. It was up 45% versus the previous week. That number, the previous week, was pretty low, and 522 is actually a pretty strong number from what we've been seeing recently. What could be part of the explanation for this is that interest rates from a couple of weeks ago dropped about 3/4 of a percentage point. So they went from around 6.5% down to 5.75%, which is pretty much where they've been throughout this week. On average, it took homes 52 days before they received an acceptable offer. That's up 2% from the previous week. Last year at this time, that number was only 30. And when we're looking at the median this last week was 39 days on market. Last year at this time, it was only 8. On average, sellers had to discount about 8% off their original asking price to secure an acceptable offer to purchase their home. So that's whatever price they listed at, and then they did a price reduction, maybe 1, maybe 2, and then they finally got an offer at 92% of the original asking price, so discounting 8%. That number continues to go up week after week. No real movement in the number of bank-owned properties on the market or short sales on the market. So as always, I will keep an eye on that and let you know if that number starts to rise. So I do have some rental statistics for you. This information came from Apartment Lists, which is an aggregator. They're typically looking at the 100 biggest cities in the United States. At the end of December, they are reporting that rents are down for the 4th month straight in 90 of the 100 biggest cities in the United States. And they're reporting that at the end of December, that rents are down 3% compared to the previous month. Part of what they're attributing this to are some folks who wanted to sell and pulled their properties off the market to enter the rental market until the market turns around and they can get a number that's a little more favorable when they're going to sell their home. Another factor that they're pointing to is a report that came out from Pew Trust Reports showing that in 2021, close to 24% of the single-family homes that were sold in the U.S. were sold to investors. And this kind of repeats what we've been talking about, where there are some Wall Street cash out there, huge amounts that have been committed towards buying real estate as sort of this asset preservation exercise. They've been doing that in 20 and 21 and 22, and buying up entire subdivisions that were probably meant or initiated as build to sell and turning them into build to rent subdivisions for their own purposes. So that may be having an effect on the rental market, which has been really, really strong up until the last few months, at least in the Portland metro area. So the last thing I have for you is a market prediction for 2024. This one came out from Veros Real Estate Solutions, which is a company which mainly focuses on real estate valuation and risk management. And they came out with a report at the end of December. Their prediction over the next 12 months nationally is that we're probably going to lose about 0.5% in the average sale price. So we're going to see depreciation of about 0.5% nationally. That's a little more optimistic of a prediction for the national market compared to what we've been seeing from some of the big analysts, some of the big players in the game. So we'll see how that one pans out. One of the things that caught my eye though was that they had a list of the 10 what they think are going to be the highest performing and lowest performing markets in the US. So let's start with the highest performers. 5 out of the 10 markets that they think are going to be high performers are in North Carolina. However, this one did catch my eye because Corvallis made it on the list as a market that's probably going to see pretty good gains, plus 4.1% over the next 12 months. And on the other side are the markets that are going to perform the worst. Seattle is in here. Portland didn't make the list, which is good. I'm happy to see that. But Seattle did make the list at -6% for the next 12 months. And a lot of the markets that are on here are markets that were really big gainers over the last 2 years. So you can see Boise, Idaho, Coeur d'Alene in here, Key West, Florida, Las Vegas, and Austin, Texas. So Austin and Boise had some of the most insane appreciation over the last couple of years. At various times, I was seeing numbers that were in the 20s, like 20% higher than the previous year, and even in the high 30s. And I think Austin even broke 40% over one of these 12-month periods. Just bonkers appreciation. So not a huge surprise that they're probably going to be seeing some of those numbers. They're probably going to lose some of that appreciation over the next year. So that's what I have for you this week. I hope you enjoyed the video. Thank you so much for watching to the very end. As always, I'd appreciate a thumbs up or a subscribe if you have not already subscribed to the channel. And of course, if you know of someone who might find this information helpful, someone who might be a little bit stressed out, a little bit confused about what's going on with the market, feel free to share this video with them. I would love that. And of course, as always, all real estate is local. We have markets inside markets inside markets. If you are curious about what's going on specifically in your neighborhood or your neck of the woods or your condo complex, feel free to reach out to us. We're more than happy to provide what we know. And if we don't know, we're happy to do a bit of research for you. Again, thanks for watching to the very end, and we will see you next week.